Bring in Tether and Worldwide Asset Exchange co-founder William Quigley. He joins us here on set. Great to have you.
Good to have you guys, yeah.
Great moment for it. I mean, as Kate was detailing there, this really, I mean, we've had severe corrections in crypto prices over the last decade plus, but none this severe when we had this much money attached to it, this much leverage perhaps in the system. So it seems like maybe the first stiff test of what this is going to become, what these products might become. What is your read on that, especially as regards things like Tether and maybe the loss of faith in the backing of it?
Yeah, well, I don't think there's any loss in the faith of Tether, as is evidenced by the fact that it is still the most traded crypto on Earth. It exceeds even Bitcoin, 30 trillion annually. And the reason is because stable coins are like the circulatory system of crypto. Without stable coins, you can't have DeFi. Most of the trading on exchanges is done for arbitrage purposes. If one side of the trading pair is not stable, you can't arb. So stable coins are very important. But what has happened is a number of stablecoin projects came after Tether, some of those not backed in a way people understood, some of them backed by collateral that was an underlying token backed by the issuer. That created problems like you saw at Terra. But stablecoins are not going to go away. But what you're going to see now is a lot more scrutiny around the collateral and the mechanism for how they keep their peg.
And, I mean, we just detailed that there has been outflow from Tether. You're saying it's still the most heavily traded. Do you feel as if that the people are confident about the collateral there? I mean, I know the Tether details to some degree what is there, but how do you account for the flows away from it?
Well, you have to look at Tether is so ingrained in the rest of crypto. Half of all trading pairs in crypto settle against Tether. So as you see a decline in crypto overall, you're going to see withdrawals in Tether just because it is the biggest one of the bunch.
I noticed you shaking your head while you were listening to Kate's report. You know, where are we in terms of this delevering, particularly amongst many of these institutions? Is the unwinding kind of done, in your opinion?
I don't think it's done yet, right? But you're seeing things like BlockFi, which is a major crypto lender like Celsius. They recently got about a $250 million capital infusion from FTX. So that sends a very positive message. I will say this, even I was surprised at the amount of leverage that was in the system. And it was darn difficult to figure it out. And we all knew with that much leverage, when it does unwind, typically it unwinds quickly. And so what I think you're going to see now is a lot more people, when they are letting people borrow their crypto, they're going to be a lot more concerned about what are you doing with it? And that was a question I kept asking. If we're giving you crypto as collateral, what are you doing with that collateral? And it looks like some of the shops were hypothecating it. And then they couldn't withdraw it fast enough as crypto declined.
So a lot of more connections, perhaps. I mean, it sounds reminiscent of the housing market and the securitizations that took place in 07, 08, that we were not quite certain as to the leverage on leverage on leverage on leverage.
Yes, though with one gigantic difference, which is the housing bubble was fueled by taxpayer-funded deposits and taxpayer-backed organizations that were buying those loans. In this case, the crypto leverage is really other people with crypto lending it out. So it is a closed system, which is why when you see $1 trillion evaporate from the crypto markets, you don't see that spread to other financial instruments. So it's very different from that perspective.
Big picture, on the way up when crypto was furiously rising in price and value, and everyone said this is reflecting mass adoption, it's reflecting the underlying technology and the embrace of it. We didn't have a control in the experiment, meaning you could tell us that it was about the technology, but really it was about chasing the price on some level, at least for some people, and putting leverage on top of it. This is a control on that experiment in a sense. What's left? I mean, in terms of the technology, what's going to live? What's being built?
I would say, first of all, DeFi is spectacular primarily because of how fast you can innovate on a blockchain. There's a lot of what I'd call copy and pasting. You can see the underlying source code, and you can use that, modify it, and do something else. So a lot of experimentation, that'll continue. And then in the areas of NFTs and gaming, globally, video gaming is about a $200 billion revenue per year business. And NFTs look to be very well positioned to take a piece of that or even expand on it. Metaverse, which is kind of like gaming as well, The primary business model for that will be NFTs. And I think soon we're going to have wearable, affordable AR glasses. And when augmented reality becomes more commonplace, the business model and revenue model that drives that will likely be NFTs. So there's a lot more that blockchain can contribute, a lot of technology.
Right, but seems not necessarily to translate into any particular right or wrong price for the coins.
It's always hard to peg that, right?
Yeah.
Because these things are based on supply and demand, how much the blockchain is being used, whether there's alternatives. So crypto, I think, will always be quite volatile for that reason.
William, thank you very much. Appreciate it.
Thank you, guys.